think we might all agree that the first rule of 2021 is to not talk about 2020. But I'd like to break that rule for just a moment because I think there are some valuable lessons learned from last year. One of those important lessons learned was that making decisions based off of speculation and headlines can be a bad strategy, especially when they're fear-driven. How many times did I hear that the real estate market was going to crash because of a recession? Or that there would be a boom of foreclosures with a number of high unemployment claims and forbearances? Or that Airbnb hosts were going to default on mortgages because of quarantine orders and the slowdown in travel? Thankfully, we didn't see that as a general trend here in the Denver metro area in 2020. I believe that what was reinforced last year, in addition to being prepared for anything, is that we should always take a hard look at our own long-term goals and financial situation when making important decisions, no matter what's going on in the world. It seems obvious, but I think we all need a reminder from time to time. We should do our best to make the smartest decisions possible based on facts and how those facts may impact our own lives. Going into 2021, there is still so much that is unknown, but we can definitely try to use the information we have to provide thoughts about what may lie ahead here in the Denver metro area. Our local economy suffered a setback in 2020 when it came to job losses. We lost around 343,000 jobs in a 3-month period, compared to 155,000 during the Great Recession. Thankfully, about 61% of these recent losses were recovered between May and November of last year. Our unemployment rate is currently on par with the rest of the country. So what else are we seeing in the economy? Average weekly wage growth is up. Denver International Airport activity, which is a major driver of the local economy, remained higher than most international airports around the country. Both United Airlines and Southwest mentioned the resiliency of our market in recent quotes. In 2021, local experts expect 9 of the state's 11 industries to gain jobs. Inbound population migration continues to trend positively, although in numbers much less than recent years. Colorado does still rank highly among states with the highest inbound migration. Our state demography office expects the state to gain about 35,000 new residents in 2021. I'd love to see this relative slowdown in population growth for the next few years give home builders and resale home inventory a chance to catch up with demand. It's no surprise that demand for homes in the Denver metro area was heightened as a result of the lowest mortgage interest rates on record. Money was cheap and made higher home prices more attainable. Mortgage rates bumped up ever so slightly in recent weeks, with Treasury yields improving in response to market expectations about lower unemployment and economic growth. If interest rates continue to rise to the 4% and 5% range this year, I'd expect to see some sort of slowdown in demand for homes, similar to what happened at the end of 2018. Will they rise that much? Not likely this year, as we don't expect the economy to be fully recovered. Additionally, mortgage applications for home purchases started 2021 off strongly, a leading indicator of continued demand for the coming months. What about foreclosure activity in response to forbearances? One would think that with the 90,000 forbearances filed in Colorado, that a wave of foreclosures was sure to follow. Castle & Cook Mortgage recently provided an analysis of these forbearances and showed that of those 90,000, about 4,500 of those were actually in a delinquent status and at risk of foreclosure. That's 0.27% of all the homes in Colorado. If we were to take those 4,500 homes and put them all on the market tomorrow in the Denver area, it would have minimal impact on our real estate prices. We'd see our months of inventory jump to about 2 MOI, which is still very much a seller's market. What about investors and rental properties? Property managers are still seeing solid rent collection rates relative to the rest of the country, despite eviction moratoriums in the state. 2021 should be a good year for single-family rental owners, while those in the lower-income multifamily and apartments may experience a few more issues. One of my local property managers recommends that if you own condos or apartments, don't expect to increase your rents this year. You may even need to drop them to retain tenants. Just avoid vacancies as they're hard to fill. Big apartment buildings are almost universally offering at least 1 month's free rent, and most of them 2 months. I expect to see home inventory continue to be a challenge in 2021. I'm already seeing home listings receive multiple offers in almost every instance. Prices should continue to grow while demand remains high in this environment. But what about the effect of the repeal of the Gallagher Amendment? The only thing we expect to happen this year is that the assessment rate will lock and property taxes won't go down. As a result, I wouldn't expect to see any meaningful impact this year on our real estate market. We won't ever truly be able to look into our crystal ball to know what will happen in the future with regards to our local real estate market. But I still think we can do our best to look at local trends, the data, and possible leading indicators to see where we might be heading. That's where my team and I come in. We want to be that valuable resource for you in your network all day, every day. Check out my team's website at modernwesthome.com or reach out to us directly to get our latest market trends reports around the Denver metro area. As always, we'll continue to keep you in the know with local real estate market conditions in 2021. Thanks for watching.